Welcome to the B.F. Anderson Technical Report for September 24th. Investors could be overplaying the election as a lasting driver of the stock market, history shows. Elections rarely prove to be instrumental in inflection points for economic or market cycles. In other words, the economic cycle is a big thing that is more than several hundred people can determine. It's a cycle that exists because there's more productivity, there's more economic activity, and so forth. So if you look at energy and financial stocks were viewed as the best bets under the deregulatory Trump administration, yet they've been the worst performers since 2016. So there's really very little correlation here with presidential elections and what goes on with the economic cycle. So let's look at the market. The NASDAQ, as you can see, we've been following that 25-day moving average very nicely. Then we got that waterfall decline back in early September. Moved a little sideways. I said last week it was important that we hold that 50-day moving average, which we did not. And so as a result, we're starting to see the reason for somewhat defensive action right now. However, on a long-term basis or an intermediate-term basis, the market's still in an uptrend. It's still in a bull market because on the weekly indicator that we use, this is the 35-week moving average, the index is above it, things continue to be in a bull cycle. Now, on the long-term indicators, which is the monthly indicators, we're still on golden crosses. The NASDAQ still on a golden cross. China still on a golden cross. So we're still in a long-term bull market. Now, on the aggression index, it's just basically saying that the sectors that have been super hot, which is primarily technology, are starting to cool down. So you can see here we broke the 50-day moving average. The 50-day moving average is now moving down. However, we are making a higher low. Now, on the weekly indicator, we're still on a buy signal here. We have broken the upper moving average, but we continue to stay above the 40-week moving average, which is in an uptrend. We are making a higher low. So we're in a correction at this point, not a bear market. In economic indicators we're looking at, treasury bonds, interest rates are flat, nothing happening there. On oil, continues, the 200-day continues to be in a downtrend. Oil is struggling with that $40 area. On the financials, we're seeing some real deterioration on the bank stocks and the insurance stocks. They continue to look weak. Now, on the S&P 500 index, on the 25-day and 50-day, you can see that we've broken below the 50-day and are continuing to somewhat deteriorate. We're still above the 200-day, which means we're in a bull market. However, I still believe that things at this time, merit caution right now. New lows, we did see a spike in new lows the other day, over 40, however, somewhat settled down on Tuesday. New lows are still acceptable. On the new highs, however, this is the problem. We saw a bunch of new highs in early August, kind of recouped a little bit, but the new highs are just not lighting my fire. On the put-call ratio, we got in extreme greed. We've bounced up somewhat. Now realize this is a 10-day moving average of the put-call ratio, but we're just trying to determine, are things too hot or are things too cold? Lately, they've been too hot. So as a result, I think we're in this correction just to normalize the market. The volatility index, which is the VIX, as you can see the big spike on March 23rd, we've pulled down below 30. So this looks okay. It's all right. Like I say, this looks more like a correction than a bear market. Now, I wanted to talk briefly about the small cap stocks. They tend to lead a decline simply because they're aggressive. People buy small caps and they're not defensive. So what I'm pointing out here, this is back to 2018. This is as of December of 2018. But you can see that the small cap index, which is the S&P 600, did break below that 50-day moving average. Then we got somewhat of a death cross on the 25 and the 50, which pretty much confirmed a downtrend. This was a nasty period, so I'm just showing you one really nasty period. Here's where we are today. You can see as of right now, the small caps have broken down below the 50-day. We are getting somewhat of a potential death cross. So I'm just really saying here, in the short run, the market looks dicey at best. Now, just a few indexes that we're looking at just to point out different things. This is the airline stocks. Continue to be somewhat in an uptrend. However, they are challenging that trend line. Let's just see what happens. This is the industrial stocks. You can see that they broke out above a resistance area, decline, moved into a resistance area, broke out, is holding. So the industrial stocks, relatively speaking, are holding up quite well. Now, this is the QQQs. It's just mainly technology stocks. You can see that they broke the uptrend line. This is where the trouble is in the market right now. These stocks just got too hot and are now correcting. This is home construction. You can see that the home building stocks have been improving, actually look kind of good. We're seeing several on our list. This is the metals and mining stocks. Broke out, however, having a little bit of a difficult time in here. We have pointed out in the last couple of weeks that, Freeport-McMoRan, which is copper, has been strong. But we're starting to see somewhat of a breakdown. Like I say, this is kind of a time to be a little cautious. I would hold off any new buying at this point. Now, I wanted to mention Tesla. A lot of news on Tesla. We sold the stock back here when it broke below in this area here. The stock made an all-time new high, pulled back, and then rallied. Then we just had battery day. So I would simply say that what's happening with Tesla is questionable. I think a lot of good news is baked into the price. Just be careful about taking new positions in Tesla at this point. It has been a big winner for us this year. Okay, let's get into the top 5. This is Tupperware. Again, it's been strong. However, it broke that 10-day moving average today, somewhat stabilizing. It looks okay. Peloton, this is an interesting stock. Mainly exercise equipment. Traded 55 million shares today, which is way above average. Broke out to an all-time new high. Keep an eye on Peloton. Don't really have an opinion on it. It's my advice. Just look at the chart. And the numbers are good. The numbers are good. Penn National Gaming, this is all about sports gambling. Pulled back today, held the 10-day moving average. Very low volume on the sell-off. I would continue to keep an eye on Penn National. We do own this stock. This is Digital Turbine, which is a company that's involved in apps for cell phones. Basically, the stock is broken out, holding very nicely above the 10-day. Looks strong, had decent volume today. L Brands continues to hold in kind of a sideways pattern. Not really something to get excited about, but it's acting strong. So that's it. Anybody have any questions, please give me a call. Thank you very much.